I like Beyond Meat. And for me, I like the probability of making money in this trade. Something that we found is when this wiretapper tool starts to get activity, like we're seeing with Beyond, it's pretty freaky. It's the performance has been awesome. So it started here, November 2nd, November 4th, November 5th. Then we got the buy signal, so that's why just playing the long side. I do think that I don't think this is going to go up all day. I think that I'll pull back just because it's going to move based upon earnings and not necessarily, with the beta of the overall market. I think it's just up right now. It's like because everything's up, so it might as well be up. But really, post earnings is going to be what dictates this name going forward. Everyone's saying Beyond just went down a lot. Did Beyond pre-announce? McDonald's just announced a plant-based burger. That's why it sold off. Beyond shares are halted. McPlant. Ah, that's funny. Pause. That's so silly. The McPlant. I love the name McPlant. Okay, wait for earnings after the close. If anything, this is absolutely a good time to buy. Any kind of pullback like this, let's see what happens after they unlock the thing. But this will move after earnings. Okay, it's all bullshit. It's all noise. Okay, they're interviewing the company after the close today. There's gonna be a long Q&A. It's a good trade. Yeah, I would. I mean, consider once this opens up again, laddering in. But again, please understand this is a binary event, guys. If we're doing November options that expire in 11 days, if you buy anything out of the money, think about this. All you're doing is you're buying stock. So if you buy the 160 calls, you're just buying stock at 160. You have 11 days until expiration. If the stock's under 160, you're a loser. So this is a binary bet. We're either going to win, and in order to win, for this to make sense, you have to make, over 3-4 times your money because we're risking the principal. I like it though. Stick with it. I feel like the market's doing us a favor right now. These are expensive. These are juicy. See, it's all bullshit. These are good too, 70 cents. This has a lot of upside skew. And upside skew means there's value still way out on the upside. So that's why I like, these different vertical call spreads, a minimum of say $15 apart. And, if you buy these for $4 and you sell these for $1, it's going to cost $3 to do the trade. You do a 10 lot, that's $3,000 of risk. And the most that you can make is the difference between strikes. Hey guys, it's Jonathan. I'm going to jump in here again because now it's 2:30 Central Time. And Beyond Meat, as you heard in the recording, it got hit because McDonald's announced they're going to come out with the new McPlant. But then Beyond Meat came out and said that they were also working on McPlant with McDonald's. So as expected, Beyond Meat goes down and then comes right back up. We still have the earnings after the bell, but I wanted to show you exactly what I did. Maybe it helps you going forward. The trick is just be patient. So I wasn't sure if I was going to do this trade as well. I just shared this trade in our membership. I share trades every Sunday, and on Monday we do a live class. So I was doing research this weekend, came across Beyond Meat. I found it using our unusual options activity tool. And so today, just going to watch. If it pulls back, I'll get involved. And that's exactly what happened. When I got off the call with the members, I worked an order and I got filled on the 175s. So the first thing I did on these 175s, which you see down here, I bought for 290. Well, I bought for 290 and the stock was still 144, 145. I felt like it was going to turn just because Beyond's got earnings after the close. It's going to move after the close when they release earnings and when they sit through the Q&A, and there's plenty of time. So I thought it would bounce. Got filled at 290, cool. Then it started bouncing. The price started bouncing, going higher. Options got more expensive. And just like in the video we talked about, it's a binary bet. So whatever I risk, if Beyond doesn't come out with good earnings, I'm going to lose on this trade. But that's okay as long as I get decent odds, if I get a good payoff. So 290, I got in. And then what I did is I waited. Actually, I just worked an order. I put a limit order and just said, hey, on this 190 strike down here, I'm willing to sell if the market gets up to me. So at that time, it was like $1.50 bid down here, $1.50 at $1.60, something like that. And I just offered $2.30. And if I get filled, great. It's a trade that I want. Ended up getting filled, 290, 230. So now I have that $15 vertical call spread. And how that works is because I did a 10 lot, I have 60 cents of risk, 290 minus 230, because I paid a debit on the 175 and I got a credit on that 190. So I'm in the trade for 60 cents. Worst case scenario, the worst case scenario is Beyond stays under 175 11 days from now. So even if Beyond trades zero, my risk is $600. I can't lose $1 more than $600. I'm comfortable with that. That's a decision I made before the trade. I'm totally okay with that. So I have $600 of risk, and the most I can make in the best case scenario would be pretty much if Beyond comes out with good earnings tonight. If they come out with good earnings, if the price holds, I still have 11 days to go. I like how the options are priced. Beyond historically does move after releasing earnings. So if it trades above 190, my $600 of risk, my $600 investment would be above 190. It would be 15,000. 190 minus 175 is 15. So 15,000 minus the 600 that I invested in the play. So the most I can make is 14,400 if Beyond's got blowout earnings. So I like my chances. If it works, awesome. If it doesn't work, still feeling good about it. I would do this trade every single day. So hope you learned something. If you like this video, please subscribe, share, give it a like. It really helps the channel get noticed. Thanks, guys.